How's it going, people? Welcome back to the Trading Code Trading YouTube channel. So something a little bit different this time. I'm going to be talking specifically about trend lines. I'm sure you've seen people drawing trend lines from body to body, or wick to body, or wick to wick, and I'm going to show you exactly how I draw my trend lines and what I've found out to be the most effective way to draw trend lines from hours and hours of back testing. So guys, I'm going to start on this Euro CAD chart on the monthly time frame. So for my trend lines, I always use wick to wick. As I said, I found this is the most effective way and most reliable way to draw in trend lines. So to draw a trend line, you need 2 touches to make a trend line, and there's 3 different types of trend lines. Let me write this down for you. 3 different types of trend lines. So you've got your long-term trend line, your outer trend line, and you've also got your inner trend line. So start with the monthly chart. I normally draw on these 3 trend lines on each time frame. Obviously only keeping the ones on that are actually relevant, but I'm going to go ahead and draw on every trend line here so you can see. So starting with the wick, this is 0.1, this was 0.2, but you can see here this wick here broken out of this trend line. So I'll then go ahead and adjust that trend line. I'm going to leave this like this because price is at this area and it might actually come back up and retest this trend line. So that's the long-term trend line. You then had your outer trend line. So this was 0.1, this was 0.2, and you can see we've broken out and we come back to retest this area. So when we break out of a trend line, 9 times out of 10 we'll come back to retest this. Obviously this took several years because this is a monthly chart, but you can see we did eventually come back and retest this. So that will be your outer trend line, and then the weaker one out of the 3 is the inner trend line. You can see that is quite steep. You had this 0.1, 0.2 come back, kind of retested it and bounced off. But the steeper the trend line, the weaker the trend line is, so it's more likely to be broken. So obviously this this long-term trend line here on the monthly chart, it's going to take quite a lot to be broken. But yeah, let me just clear these key levels a sec to make it a bit more clean. So yeah guys, that's your 3 trend lines, and let's go ahead and drop down to a lower time frame and show you exactly how to draw on a lower time frame. So you want to zoom out, make sure you can see everything. Alright, so let's go ahead and start drawing in the long-term trend line. Wick to wick, remember, 0.1, 0.2. So looking for that third touch could give a good short. You can see it also lines up with this zone here, and possibly got this Fibonacci here, could come back, retest this 38.2, might even have another fib here. You can see we've got this support that we're struggling to break through now, so might have another fib here. You can see the 61.8 lines up perfectly with 38, so that's how I'd go about trading that. Anyway, back onto the trend lines. So that's a long-term trend line. You then had the outer trend line, which was this one, 0.1, 0.2. It's broken out, might come back and retest this, have a little bounce before making its way up back up to the long term. So that'll be your long term and your outer. And we had this inner trend line here, which we've broken out of. As you can see, the inner trend line is always quite steep, and most of the time they just get broken, but it's good to have it on your chart anyway, because sometimes they can give some resistance or support. So say if you're looking for longs down here, you want to be having this trend line on, being cautious just in case price stalls at this level. So personally, I only trade the 3rd touch of a trend line. I'm sure people trade the 4th and the 5th touch and all that, but I found after the 3rd touch, the 4th touch is more likely to be broken, or the 5th touch even more likely. You normally see, so let's draw this on, so 1 touch, 2 touch, and I'll be looking to trade the 3rd touch. Normally the 4th or the 5th get broken, but then you can look for your retest, and then using different tools as like added confluence like your Fibonacci and your key levels and that. Now I mentioned I normally draw all 3 trend lines on each time frame, but I would only keep the ones that are still relevant. So you see this inner trend line, it's probably not going to be relevant in the future, and also this outer trend line here is just broken out of no resistance and broken back below, so now this trend line's weak, so I wouldn't keep that on the chart either. And of course you've also got this ascending trend line as well. This would have been the inner trend line, broken out, retested, broken out, retested, you see that? So I wouldn't keep that on either. And you can see that with these 2 trend lines you've got a triangle formation. Now one thing that happens with triangles, we normally have fake outs before then making its move. So another thing retail traders do, they normally trade the break of a triangle, which also doesn't work either. Well, it might a couple of times, but it's not consistent. So one thing to keep in mind for triangles is watch out for those fake outs. So a fake out to the downside and a fake up to the upside before then making its bearish push, or one fake out. But yeah, majority of the time triangles do make fake outs. So guys, another thing you normally see happen with trend lines is, so I'm going to show you right now, clean up some space here. From experience of trading trend lines, I've noticed you see this a lot. So say this is a monthly time frame, a long-term trend line. What you normally see happen, if I can find my brush tool, so say this is a monthly long-term trend line, on the daily you'll see maybe like a bounce like that, and then we'll come back, we'll break through on the daily, but by the time the month ends we'll be back above, and then we'll normally come back and retest this area again before then actually making its proper move. And you can see this is an inverse head and shoulders move, or head and shoulders if it's like a descending trend line. So you have a little bounce, you break through, and you come back and retest. So something like that, you see that happen time and time again. Quite a lot of retail traders, I'm sure you've heard people doing this, they trade the break, and as soon as this trend line breaks, they will set a short order, and 9 times out of 10 they will get stopped out, because fake outs happen a lot on trend lines. So you don't want to get caught out. You want to let this breakout happen, be patient. So if it comes back up to this trend line, you can then, if other thing lines up like a Fibonacci from here to here, and a nice rejections on the back end of this trend line, you could look for shorts, or you could look for a break back above and a retest of this side before then looking for its bullish push. And obviously you can see if trend lines line up and all that. But yeah, that's how I trade trend lines. It's fairly simple. It requires a lot of patience really, but as I said, a lot of people trade the breaks of trend lines, and that ain't the way to trade, guys. A lot of the time you're just going to get stopped out. But yeah, I hope that helps some of you. You know, like wick to body or body to body, it's not incorrect if you do trade trend lines like that. It can work, but as I said, I found these trading wick to wick have been the most probable. So guys, that's trend lines in a nutshell. If you did enjoy this video, please give it a thumbs up, and don't forget to subscribe, and we'll see you in the next video.